In an industry where electric cars are developing quickly, Tesla sticks out like a blazing star. However, what is the magic ingredient that propels Tesla's stock higher and its inventions to the fore? We're going to take you on a tour through the perspectives of analysts like Warm Capital researcher Cameron Tierney and his partner Eric Markowitz, who have found the little known secrets that give Tesla a competitive advantage. We're also delving deeply into the fascinating world of Tesla and the revolutionary technology that has the power to completely transform the sector. Analysts are talking about this subject nonstop, and it may astound you. So buckle up, because this is going to be a crazy journey as we examine the revolutionary technology that has the potential to completely transform society. Tony Seba created this vision, and it's incredible. You don't want to miss a single detail, so don't blink. Before we go any further, please help us out by clicking the like button, subscribing to our channel, and turning on the notification bell if you think this kind of information is interesting. In this manner, you'll stay up to date on all things Tesla. Okay, let's get going now. As we prepare for yet another earnings release, let's change tack and focus on the automotive industry, particularly focusing on the much-awaited Rivian earnings report. The other half of Next Generation, Alex Coffey, joins us in the driver's seat of commentary. This is not your average pit stop report, so fasten your seatbelts, people. It has improved dramatically in the past 2 months. The market was a bit of a cautious driving teacher after Rivian's most recent earnings report. It wasn't quite delighted with his performance. But wow, did Rivian pull off a fast and furious trick? We're left wondering what the next hurdle is for this company to overcome. Did the latest spike occur as a result of deliberate skill, or did the market simply become more risk-averse? As for Rivian, well, he's the group renegade that everyone else can't help but notice. At 12.8%, short interest is comparable to that clinging passenger in your car. When you are a high beta player in a market where everyone is vying to be the next mega cap tech superstar, that's the kind of attention you receive. However, as our reliable chart shows, Rivian is still doing its best version of a roller coaster, down about 40% over the last 12 months, despite its jaunty year-to-date rally of nearly 30%. Let's now move into the present day, where the tale of Tesla is being told. Analysts are using their crystal balls, which are similar to fortune tellers in the financial market, to glimpse something fascinating. Consider Warm Capital researcher Cameron Tierney and his associate, Eric Markowitz. They are endorsing Tesla as the industry leader in electric vehicles. All of this is attributed to Tesla's exclusive blend of advanced artificial intelligence, state-of-the-art software, and vertical supply chain integration. Hold on to your chargers or your horses, as the case may be. It's a crazy ride, the stock market. Though experienced investors like the well-traveled Tony Seba may tell us that stocks are like teenagers. You can't foresee them, but you can hope they grow up to be good people. In addition, we are going to present the most recent evidence that Tesla is the unicorn of the electric vehicle sector. It's not even an exaggeration, I promise. Tesla is outpacing its rivals as though they are snarled in traffic. Electric cars are about to have a major breakthrough. They're going to becoming more affordable and stylish than those outdated gas-guzzling dinosaurs. We genuinely think that EVs will be the sleepover kids who won't go to bed, even if the whole auto industry decides to take a nap. Elon Musk may have downgraded his sales projection for this year, citing improvements and maintenance as the grounds for a more somber assessment. But keep in mind that Elon enjoys playing the part of the sly one and has a talent for going above and above. If he floors it and goes full absurd on those delivery statistics, don't be shocked. Tesla is going full crazy scientist mode instead of merely playing around with improvements. Not only are they altering the game, but they're also constructing a brand new stadium expressly for it. Even though they may be relatively new to the auto business, they already have a place at the cool table. Indeed, although Elon Musk's 2013 car sales forecasts may seem archaic, they demonstrate that Tesla has been pushing the gas pedal from the start. Along with other Tesla enthusiasts like Cathie Wood, Tony Seba predicts that EVs would not only be more affordable than ordinary automobiles, but also so stylish that James Bond would be willing to trade in his Aston Martin. The shocking thing is that while many corporations are eager to join the EV bandwagon, many of them are a lot like young children learning to ride a bike without training wheels. They just can't seem to find their balance. Indeed, a number of well-known automakers, including Ford, GM, Mazda, Toyota, Volkswagen, and even Jaguar, are beginning to acknowledge that they feel a little bit like the child who misplaced their pedals and are now pleading for exemptions from green fees. They appear to be attempting to buy their way into the EV club. What then is their remedy? It's kind of like when a child can't keep up with the other kids on the playground. Instead of asking for special treatment in the form of green taxes from adults, in this case, it's government policy. Hey, we might not be as good at this as some others, but can you cut us some slack? Seems to be shouted as they wave a flag. To put it simply, they're trying to bargain their way into the EV club in the hopes of gaining some leniency to ease the transition. It's similar like asking your teacher to let you finish a homework assignment later than you originally planned. It remains to be seen, though, if these petitions for special treatment would be granted or not. In the realm of electric vehicles, as they say, only the strongest will make it uphill. Now, we're not arguing that these businesses can't embrace the EV revolution. Rather, it's just that manufacturing a sizable quantity of these electric cars presents some formidable obstacles. We'll also explore the reasons behind these industry heavyweights' difficulty navigating the complexities of the EV world. The difficulties faced by a few well-known automakers have recently come to light, and it's not as easy as one might believe to transition to electric. Let's investigate more closely. Once ambitious competitors in the electric vehicle market, Mazda and Jaguar have given up on building EVs for the general public. It seems as though they have temporarily put their electric vehicle aspirations in the garage. Then there's Volkswagen, a titan of the automobile industry that has seen some difficulties, especially in China, where sales of its electric vehicles haven't exactly taken off. It's like taking a detour to reconsider their approach. Being a veteran of the car industry, GM is in a difficult position and is kindly requesting some tolerance due to their projection of a spike in sales between 2027 and 2030. Finally, but just as importantly, Ford, a well-known brand in American automotive history, is producing EVs at a slower pace. Why? Since each one they sell costs them money. These aren't just any regular speed bumps. Rather, they're stark realities that highlight the difficulties these massive automobile manufacturers are facing when navigating the EV landscape. Let's now turn our discussion to Tesla, a business that appears to be handling this environment with amazing skill. By the time 2030 rolls around, Tesla will have made headway toward its bold aim of producing millions of electric vehicles annually, while other automakers might look like they're caught in rush hour gridlock. The creative leader of Tesla, Elon Musk, just revealed this audacious initiative. Here's the twist, though. Tesla isn't happy to just sell automobiles. Instead, they want to completely transform the world's auto industry and replace at least 1% of the 2 billion automobiles and trucks that are driven on Earth each year. Although it sounds like an extremely difficult task, it is not as impossible as one might think given Tesla's remarkable technological prowess and growing network of gigafactories. This is the bit that chills the blood of enthusiasts and investors alike. It's likely that Tesla's stock price will soar if it is able to increase car manufacturing. Given his proclivity for lofty goals, Elon Musk wants Tesla to be the best in every way possible in every area of business operations. This entails not just leading the global shift to sustainable energy, but also expanding the market for their products' accessibility. If the company's target of 20 million cars isn't enough to leave you speechless, Tesla has one more trick in its sleeve. You're aware of what it is, right? It involves the yearly deployment of 1,500 gigawatt hours of energy storage. Consider it a massive battery that can save the globe, an unparalleled technological feat. Let's now conduct some simple calculations in this case. Even if Elon Musk's ambitious projection of 15 million cars sold by 2030 were to come true, it would have a significant negative effect on Tesla's earnings. Their overall income might perhaps reach an incredible $1.04 trillion. This is evidence of Tesla's revolutionary significance in the future of electricity and transportation, not just a financial accomplishment. It's a vision that promises a more sustainable and greener world, one that goes beyond business as usual. Tesla is at the vanguard of this paradigm shift with its unshakable dedication to make a difference and its persistent pursuit of innovation. Beyond just its electric vehicles, Tesla's initiatives have a significant impact. It includes more than just energy solutions. Consider this. The stock market may be undergoing a significant shift if Tesla's forays into non-automotive businesses, including energy solutions, only generate 15% of total sales. The ramifications are astounding. Tesla's stock price might soar to an incredible $6,000 per share by 2030, if not higher. An investor's dream come true if they follow this financial trajectory, which might lead to a comfortable retirement. That's not all, though. The Tesla saga is still a long way from coming to a close. The mysterious visionary leading the charge, Elon Musk, has revealed a few top-secret tools that might completely alter daily life and transportation regulations. Let me introduce you to the Tesla Robotaxi, a concept that offers a cheaper alternative to a bus ticket and a future in which cars drive themselves through the streets. Imagine the affordability and simplicity of a self-driving car service. This could revolutionize urban mobility and change the way we get from point A to point B. Then there's Optimus, the 5-foot 8-inch robot from Tesla, built to handle the routine daily chores that frequently eat up our time and energy. Elon Musk has said that the mechanical marvel might potentially outperform Tesla's already successful automobile industry and its groundbreaking self-driving technology, proving that it is more than just another creation. That's pretty much it there is to this video. In conclusion, we have looked at the difficulties that a few large automakers are having with electric vehicles, even while Tesla keeps pushing on with its audacious plans to completely transform the market. Tesla's future appears bright, with plans to produce 20 million electric vehicles annually by 2030 and an emphasis on energy solutions. What do you think will happen to Tesla now? What role do you think electric cars will have in the future? Will they really end up being more widely available and less expensive than regular cars? Please share your thoughts with us below. Finally, before we part ways, please help us out by clicking the like button, subscribing to Tesla Stock News, and turning on the notification bell if you find this kind of news interesting. We appreciate your time and hope to see you in our upcoming films.